Welcome to The Local, where Tim's let me do the intro today. So it's a big day for me.
Yep.
It's a podcast where we talk about all things crypto markets and increasingly AI at the moment.
Yeah, can't get off it.
So I just want to welcome Tim, obviously, who you know, and we've got a guest today, Ramiro from Strata.
How you doing?
How you doing?
Very good, very good.
You got the memo on wearing black? Yeah.
I got it. Everything was prepared.
And you found the location to our pub.
Yeah.
Okay.
Secret entrance.
The speakeasy.
So Ramiro, you're from Strata.
That's right.
How did you come to be part of the project? How did you come to be involved? Was this your first step into crypto and DeFi, or?
I mean, how do I get into crypto? I read the Genesis white paper when I was in uni.
Okay.
In 2014. 2014,
Yeah.
I think. So that's, when I was in Argentina, I read this Bitcoin white paper. I started talking
It
to
was 2009 was the first.
It was when he read it.
No, when I read it.
I was gonna say,
It took 5 years to trickle down. The waterfall was quite slow.
There weren't many people that read it in 2008.
No. So I had a friend who was an anonymous. Who worked at. He was a. He was very, very good sort of systems architect, but he was actually a white hat hacker in Anonymous.
Right.
And he told me, "Hey man, you have to read this."
Look at this. This is
I
revolutionary.
didn't in a pub, in an outing. He told me about that. I didn't listen much. 2013. Then I read it. Then he told me about it again. Like 6
Hindsight's
months later.
2020, though, isn't it?
It's an amazing piece of academic progress. It brings together these
It's fantastic.
three or four very hard problems and all solves them all in one place. It is remarkable.
If you have no computer science background, then there's like 80% of it or more. It's very complex. You don't really understand it. Now with ChatGPT, you can fully understand it because it explains like
we're onto AI already.
but if you look at the economic, which I study economics, so I looked at the economic model behind this.
Yeah.
I was fascinated, right? Especially coming from Argentina, where our monetary policy is completely destroyed.
Yeah.
We are one of the few countries that without war has inflation.
Yeah.
Like usually there has to be something.
Some external factor like that, that's causing the inflation to happen. Yeah.
In our case, it's just complete ineptitude.
Mismanagement.
Mismanagement, but at a level which we had, 50, 60% inflation. When I was born, we had like 1,000%.
Is this one of the reasons why the building community, crypto community in South America and Argentina is so strong?
Even USDT. If you ever hear about Paolo talking in any of his talks, he always talks about Argentina because the market there is huge for USDT.
Yeah.
So everyone talking about DeFi and everything. USDT on Tron.
That's what everybody uses.
That's in Argentina, everywhere.
And so that's and in Argentina, that's how many people would you say? What's the penetration of people like using it to actually pay for stuff?
It's actually a good question, but it's huge
amongst younger people. It must be, yeah.
We were living in Argentina before Christmas. We saw signs.
A lot of signs.
You went to
we went to DevCon. Yeah.
You cannot really pay in USDT. I haven't seen it in many places, but either people get paid in that, or they somehow use it to essentially have a store of value.
Yeah.
Because in Argentina, people save in dollars.
Yeah.
Like I used to, when I was a kid, or always growing up, we save in dollars.
So we get paid in pesos and then converting them to dollars then and
So what these guys at Lemon did, which is a wallet, they created a really robust peso to USDT.
Right.
It's like a
rail or
brokerage or whatever.
Yeah.
And they have really good conversion rates. So you essentially live in USDT, but sort of pay everything in pesos.
Right, okay.
So you're having that.
I could have done with that when I was trying to get taxis across town.
Yeah,
but you have to be local.
Yes.
I gave a lot of recommendations to people that went like, okay, do this, because at one point now with the new president, the capital controls are different. But before there was a 100% discrepancy between the exchange rate that the government set and the black market rate.
Which is the real rate.
Which is the real rate. So there was like 1,000, and the other one was maybe 500. I'm just giving you a number, right? But
so do you think your growing up in Argentina has been pretty pivotal in making you get into crypto?
Because when I saw Bitcoin, I'm like, wait a second, there's private money.
Right?
So when there is a failure of the public sector, then always the private sector comes in.
Yeah.
So in Latin America, you see it very well in healthcare. So here in the NHS works perfectly, right?
Again, it works. It works.
That's what I'm saying.
If you break a leg, you will get your leg fixed, right? Eventually.
It's a public thing. I mean, I've gone to. I mean, you told me when we met that you had a kid.
Yeah.
I had a
We've got
baby not long ago.
Not long ago, right? Yeah.
Yeah.
You're looking
And-
very well rested, actually.
I'm the one sleeping at home. But there is no cashier in the hospital when you go in and out. Right?
No.
So everything is.
You need cash for the vending machine. That's about it.
But in somewhere like Latin America, if you have a certain middle class or higher class, you don't really go to the public hospital.
Oh, you just go to the private hospital.
You go to the private hospital because the public sector has completely failed in health.
Right. Okay. Yeah.
A lot of people say otherwise because Argentina compared to other countries in Latin America, they have better public health. But I went once to a public hospital, and it's a very different thing than the NHS. So when the public sector fails, then the private sector comes in, and that's what happened in Argentina with money, which is one of the Argentina, Turkey, Lebanon.
Yeah.
Here, that's why stablecoins. People, do you need stablecoins? I mean, everything is digital. But
yeah. So I can kind of see what you mean.
Arguments around efficiency and
there's about the tokenization of
It's
finance.
yeah, but it's one of those things. I was talking to we've got a friend who's just moved to America, and he's like, I can kind of see why stablecoins or like things might be thought more of a thing in America because it's an absolute nightmare to like transfer people money over there. It's still quite backwards. Whereas I think in the UK, because we had this like
faster payments.
fintech has been so cutting edge. I mean, you wouldn't think anything of like sending your mate 20 quid for the bar bill or whatever. It's going to be instant transfer. Yeah, maybe it's one of those things where. I mean, I was still shocked by one of the things I heard in Abu Dhabi where one of the guys told me that the main uses of USDT was to get around sanctions for buying oil, and did I want to get involved?
well, that's an interesting conversation you have in Abu Dhabi.
But Argentina USD you get around the capital controls. of the
Yeah.
government. So if you need to sell an apartment, for example, you sell it cash.
So
Imagine that.
Yeah,
Cash.
It's a lot of cash.
It is a lot of cash.
And then you
Dollars cash.
cash dollars, and then you get it somewhere in an account or in USDT.
Wow.
But for that to happen,
Just you are waiting for like 2 days or something like that.
yeah,
You get it?
exactly.
Yeah.
You wait for 2 days and then it shows up.
And
That also
and
happens.
it trusts and it works.
Well, I mean,
Most of the time.
You wouldn't want to trust it like that, I suppose. But
no, there's a lot of trust involved. It's just that because stablecoins remove a lot of that
Yeah.
trust element because in the moment you can do that transaction.
Yeah.
So there's a lot of a big volume of USDT for out of call it black market, but over there everything is kind of gray market.
Yeah.
Places like I've seen in Bolivia that you can buy things in shops that are already denominated in USDT. So something is priced in USDT, not USD.
Right. Okay.
And then places like Venezuela, where like there's a big government failure over there, then everything is in USDT. Where you go to Chile or you go to Uruguay, where the government works, there's no.
I want to know about the route in. So reading the paper.
Sorry about that.
Sorry.
Yeah, we were there. So
I was going to ask about use. Like this is like very rudimentary use case of crypto as cash.
Yeah.
This is far removed from on-chain structured
Products,
credits.
yeah.
You know what I mean? And structured
Yeah.
products. Yeah.
So
But go on. Anyway, go on. I'm gripped
so
by the root.
it was kind of a way in, right?
Yeah.
So Bitcoin, what happened was Bitcoin had a lot of volatility and it serves as a store of value, but in those times. It went from 400 to 1,000 and 200.
Yeah, it's not a very good store of value if it's moving around that much, is it?
And then and then it wasn't easy to acquire. So I was doing brokerage in cash. Like I was getting friends or people that I knew that they wanted to buy Bitcoin. I would go downtown with a stack of cash in my pocket, buy it from some
Local Bitcoin.
local Bitcoin dealer also sold cash dollars.
Yeah.
So they were already selling cash in dollars. In Argentina, you have these caves.
Yeah.
They're called caves. Basically, you go in, basically like Hatton Garden here with the jewelry shops.
Yeah.
But for USD cash and then for
Bitcoin as well.
Yeah.
So then you probably went there in Argentina.
Yep.
Okay, yeah. So then I would do that, and then Ethereum came out around I think it was
2016,
17. Yeah.
It was already being explored before, and then that's when things started clicking on smart contracts.
Yeah, because programmable money is
Programmable
there's one thing you've got private money, but then when you get programmable money,
Yeah.
that really does change the game, doesn't it?
Yeah.
Yeah.
So that was 2017. Some ICOs were crazy.
Yeah, that was the crazy time. I remember missing out on the Ethereum airdrop. It was like... Yeah,
What was the qualification rules for it? Or did you
it was just I can't remember.
Sign up?
Yeah, basically just sign up. You
just
put some cash in, yeah.
Like a faucet.
$50 or something.
You could buy cheap as well on
Yeah,
Poloniex.
Yeah.
That was the exchange back then.
Poloniex was an amazing exchange because it had the first ever funding market as well. So it had a live order book for margin.
Oh, really?
So, yeah, you can actually trade the margin and the funding and the rates as opposed to the actual token. So you could go and do borrow live, and I've never seen it replicated anywhere else since. So.
Was there good volumes and stuff there?
Poloniex was a decent exchange. Right?
It was easy, even served as wallets for a lot of blockchains that didn't have.
Right.
Before you had
I
new.
think I used cryptopia.co.nz.
Yeah.
I used that.
Went
Back
bust.
in. Yeah, they went bust. I think I've still got a thing there. I've still got
a claim.
Yeah.
So you and you got emails for like 5 years after.
Yeah. I think I'm going to get my XSpec tokens back.
My 2Z cash. It wasn't straight from I've read the white paper.
No, I mean I did a few years of like working as a valuation analyst, TradFi.
Okay.
A lot of
a real job.
Yeah, no, opportunities in crypto blockchain between 2017.
Fair.
I did a bit of.
It was the winter, wasn't it? Yeah, because I remember there's just no volatility 2018. Like it wasn't going sideways.
Also, there weren't a lot of not a lot of DeFi projects.
Yeah,
not a lot of the L2s, the L1s. I mean,
the Cambrian explosion of projects was 2021.
2020 DeFi summer, yeah.
So,
well, DeFi didn't exist really, right?
Nope.
Back then. It was
Curve, the Windows 98 Curve.
Wi-Fi, Uniswap protocols.
Yeah. But I mean, the 2017 boom was all like privacy tokens still and like things that were
not much.
Yeah, Dash.
Yeah,
huge
IOTA and stuff like that, and
Cardano.
I bought Chainlink back then.
Yeah,
50 cents.
EOS.
Yeah, EOS.
There's all of them, right?
But they weren't finance related, really. Not all really. In a way that
no, they weren't like
DeFi.
Like 2020. DeFi. So I was at that time I was working for a Swiss company selling infrastructure, essentially trading white label exchanges, liquidity trading engines.
Yep.
Okay.
And my CEO then he got very deep into DeFi, and that's when I started testing all these protocols, these crazy APRs. So Strata is a generalized risk tranching protocol. We started incubated by Ethena, essentially building on top of Ethena's delta neutral stablecoin delta neutral strategy in order to provide a tokenized senior and junior tranches where the senior tranche essentially gets coverage from the junior. Very much like securitization.
Okay, so definitely for the viewers and not for me, what's the difference between senior tranches and junior tranches?
For sure. So junior tranches are essentially the ones that take the underlying risk, they underwrite the risk of
so they're the underlying strategy in this.
They are the junior tranches of you call it of a structured product, right?
Okay.
You call it a CLO.
Classically like a waterfall.
Exactly.
Right? So this is giving me sort of PTSD.
Yeah, my finance career I was a quant researcher, like looking at statistical arbitrage. So I've kind of picked up a little bit about like structured products and credit and all this kind of stuff, but I'm not an old hand like you are. That's how you cut your teeth, right?
Well, I was on a trading floor where our CDO desk managed to almost blow up the whole bank in 2008 by taking very, very small edges off some of these products. So talking about waterfalls and securitization brings me out in
the heebie-jeebies.
I mean, that's very much the idea, but how do you bring that on-chain, fully on-chain?
And how do you make it as sensible from a risk perspective as possible?
Yeah, I mean, that's the whole point. So we essentially built a fully on-chain algorithm that essentially takes the underlying yield and splits it between a senior and junior, with the senior paying a risk premium for the coverage to the junior, and the junior essentially gets leverage upside on the underlying, which could be either positive or negative, depending on the performance of the strategy.
And the sources of the yield, is it just Athena or is it?
Right now it's Athena Neutral, which is another crypto native yield. It's a similar product to Athena, but they do OTC arbitrage.
Yeah.
Bigger picture for us is essentially vertically scaling and originating these yields ourselves. So what you have is you have on-chain yields right now, then you have off-chain tokenized yields. Let's say something like USDC from Superstate, other products that are coming already, say tokenized.
Yeah, so basically yield that already exists out in fixed income space or whatever.
And it's already been tokenized, we can tranche it. Then the bigger picture is how do we already create this tokenized, how do we tokenize these instruments, this off-chain yield, and bring it on-chain structured, which is more capital efficient. And then the even bigger picture is how do we start originating yield sources, right? Through essentially.
So what would that be? Sort of some like your own yield generation strategies?
Yeah, origination says, hey,
Whatever you can
financing, solar energy.
Yeah. Okay. Yeah.
Essentially, but the way you bring it on chain is essentially you structure it, and then you have a product that allows investors to tailor their risk reward exposure. Because what you have until now is very supply driven DeFi, right? Everything is one size fits all. You have this tokenized strategy, and then up to a certain point, everyone thought number go up. These strategies only go up even if they have 8%, 10%, 12% yield. But at one point there is, of course there's risk in everything.
Yeah, at some point there's the funding goes negative or blah,
any
blah, blah.
yield above a benchmark is always carrying some sort of risk that's not always obvious from the beginning.
So if you are willing to take that risk, say on the junior, if you're willing to pay for someone else to take that risk, but you still want the underlying yield, you can sit on the senior. Very much like you saw it on TradFi. It's just that in DeFi is you have to you want to do it on chain. How do you do that fully decentralized?
No, that makes sense. And there's a subtle difference, like because the TradFi, particularly mortgage-backed securitization, the problem there, there are lots of problems, but the core problem was that you take low-grade debt and it would exist across the whole of the structure, but you'd feed in the yield that was coming from all of this low-grade debt to the top level, and as a result of it being the first to receive the yield, it got this rating increase, despite the fact that at heart it was still very bad debt, low credit rating debt, and so it's slightly different where the underlying yield source is the same for both tranches and the same quality across the whole senior and junior piece. It's just how you distribute the yield that goes across the two.
Exactly. The underlying strategies have different levels of risk.
Yeah.
Right. Something like Ethereum, something like neutral, something like
Well, Athena's got risk. If funding goes negative, I suppose, for long enough time that they. But I suppose they've probably built up quite a lot of UST balance now.
They already have an insurance fund.
Yeah.
What we do is we provide essentially a product that if a certain benchmark is not met, then the junior covers that. So essentially, the senior has a minimum guaranteed APY.
Right. Okay. Yeah. I see.
And that minimum guaranteed APY can be anything.
And so but there must be a cascading risk though, right? So what's the stress scenario then where the senior could lose, would not be able to make their floor?
It depends on the underlying, right? For something like Athena, they would have to underperform the DeFi benchmark in our case by 5% for a year.
Okay, right.
Which
It's a long time. Yeah.
It's quite a long time for the junior to fully deplete.
Right. Okay.
And then what you get in the senior is essentially SUSD, which already has its own insurance.
Right. Okay.
So that's a product that we have that we think adds a lot of value to an optionality to users. But bigger picture, what we want is for the tranching itself to be the insurance, right? Not to have an insurance fund.
Yeah.
You don't have to fall over to that.
Exactly.
Avoid it.
So
is the tranching itself the insurance in TradFi then?
in a way, the junior serves as an insurance. It's just that it's not 100%.
Yeah,
which doesn't make any sense.
Yeah. It's like a partial insurance.
Yeah.
It depends on the coverage.
Right.
So in our case, it's dynamic. The coverage ratio determines how much of the strategy is insured.
What is that set by?
It's set by every action of the user. It's set by demand and supply.
Okay.
By demand.
Yeah.
So every time there is a minting of the senior or the junior, the TVL ratio changes, and then how the yield is split changes.
Makes sense.
So as the coverage decreases, the APY that the yield that the junior receives increases in order to attract more demand, and essentially finds a balance.
Yeah. Okay. Trying to find the equilibrium point.
Yeah. So what we set as parameters similar to what you see on an LTV or lending protocols is we set essentially the parameters that determine the risk premium between a min max and then a scaling factor, and that depends on back testing of the underlying.
Right. Okay. And you've done all that back testing, and
we've done the back testing, and recently we've updated the Ethereum one because we launched right after October 10th.
Okay.
We launched on October 13th, and the risk of the underlying materially changed after 4 months.
How many of you are in the Strata team now?
Right now we are 4 co-founders, one and myself. Then we have we hired 2 developers recently, and then we have legal and community managers.
Oh, yeah, compliance and all those.
Yeah, we have we need some help on that side.
4 co-founders. Like we have 3 in our business, and I think we're lucky in that the responsibilities are split.
Very much on our side.
And the same with you guys, yeah.
Yeah, so we have visions on the product, sort of the DeFi mind in our team. I'm on anything that is growth, operations, finance, and then we have Peter and Alex who are very much on the tech
engineering
delivery
side.
and smart contract development.
Yeah.
So we built
it does work quite well then.
Yeah, we built the first Strata that captured almost the first product on USD that right now has 160 million. We built it without any external help with a bit of funding from Athena.
Yeah,
nice.
That's
very lean. But now we want to as we scale, as we build more strategies, as we build as we want to horizontally expand and verticalize, and we
more people
more.
More
hands on.
It's not going to be all done by AI agents, you don't think?
We explored at one point, I think last year, end of 2024, there was a lot of hype around that.
Yeah.
With virtuals.
Oh yeah, virtuals and all that.
But what happened with a lot of them is just call it machine learning, but basically rule-based allocations. Into lending.
Yeah.
I haven't checked the OpenClaw or all the
I've
seen it in Twitter a lot, but I haven't had time to dive deep.
I think your developers must be using it, I suppose, but
we use a tool that is called Olympics.
Okay.
It's DevSec. So essentially, they are a bit of a AI tool for when you build your smart contract, you can essentially run some tests on it.
Yeah. So, because I was going to say, is that your main? I suppose your main risk factor is smart contract risk.
Yes.
Yeah.
Yeah. So that's our smart contracts are not super complex because essentially how our infrastructure is divided is there's a few core smart contracts, and then for every strategy we deploy new ones. So all of the strategies are isolated, and essentially you have an accounting that splits the yield, and then you have a CDO that essentially does all the algorithms that counts for the risk premium, etc.
Yeah.
So they actually call Strata CDO.
Yes,
CDO. He's getting even more heat over that.
You're getting the jitter.
Collateralized.
But those things work. It's just that if you leverage them up and you try to, the margins compress. Yeah.
So that brings me on. Actually, what's the? Do you see have you got a lot of competitors out there?
So we've been compared to a few protocols. At one point we were being asked if Pendo was a competitor, but Pendo is one of our best partners.
Well, they do the splitting as well. Right?
Exactly, but they do a different one.
It's different.
They do yield,
fixed yield,
time. We do yield. We do yield and risk. So we split the risk. They split.
Yep.
Essentially, they build these strips. Or
discounts and strips.
Bonds. So every senior, junior asset that we have, given that it's tokenized, it has a Pendo market.
Yeah. Okay.
And then essentially,
it's like another dimension of which way you can.
Exactly. So you have a CDO squared.
Yeah.
If you want to call it like that. So you have structured products and structured products, very attractive for more sophisticated users in the space.
Who would be the target users then? Who's the kind of people that you would want using this product?
Our product or the combined product?
Well, both.
Yeah, our product is perfect for. So if there is demand of the underlying yield already, let's say something like neutral or Athena, but that product is a one-size-fits-all. So you cannot fit all the LPs in the same bucket. So what happens is that LPs have different risk-reward preferences. They can just sit on one side or the other. If they want to take more risk or less risk, they can have this instrument with the same UX as the SUSD product or SMUSD. So we maintain the UX for the user for composability, same UX, but what we're essentially providing is optionality on the risk you want to take. And how do you want to approach the underlying yield?
Yeah. Okay.
So essentially you have, if you want to pay a risk premium to a junior to give you that coverage and guarantee that you have a minimum APY, or
you can give away a little bit for basically, you're just trying to scale the sigma on the denominator, right? Basically,
it always comes back to maths with you.
It's good. I'm not on that level of math, but
that's what you try to tune, though, right? Yeah.
Who are the natural holders then? No, do you have a concentration of of LPs that come from particular backgrounds, or
we've we have a lot of diversification in the user base because we have through Pendle a lot of retail users,
Yeah.
right?
Mm-hmm.
And then, but also through Pendle, through ourselves, through our products directly, we have a lot of funds that use our products for their portfolio, for their strategies, right? They either want to sit. The looping the senior is a very attractive risk reward trade. Because
senior into junior? Or
no, looping the senior. So you take the senior, you borrow against it, and then
you leverage the senior one.
You leverage the senior. If you have an attractive spread there, it's a really good or very attractive risk reward position because you're essentially your senior is he has certain coverage by the junior, right?
Yeah.
So you're already minimizing the risk, but at the same time you're
Leveraging it up.
Leveraging it up.
Yeah.
And then the junior by itself, either spot or in a derivative like Pendle, there's a lot of hedge funds that want to sit on that because they can manage the risk. They understand the risk and they sit on it.
So are you seeing you're seeing these kind of users then?
Yeah, we've had a conversation recently with a Singaporean researcher hedge fund, very well known, and he said, every person I know is either on the senior or the junior of your USD product. But DeFi Capital is always chasing the best
yields.
The best yield, but now more best risk reward. I think a lot of people understood that the 12% carries risk.
Yeah,
because if it's
so you're telling me that it wasn't going to be
1,000%.
UST wasn't going to be 20% every year forever?
Yeah, but not the same mistake, but the same naivety was seen last year with these other products, right? But I think we have so much inbound now compared to when we were starting this out in.
How's that come? Has that come from word of mouth, or just have you done work to grow brand, or?
Yes, I have to say that. My co-founder is my co-founder better. I'm number one marketing.
Yeah.
That's my role.
I asked you how many podcasts you might have been on because we're a bunch of amateurs here, and you were like one. So I mean, there's something you're doing right to get this inbound.
I think a lot of we have a lot of users. We have a lot of good partners.
Yeah,
and then. The space is it's not that it's small; it's just very concentrated, right? So a lot of people, it's easy to get warm introductions.
Yeah.
So we get a lot of warm introductions from other partners that we already work with.
Yeah.
They say, hey, they want to explore this use case. Sometimes we take it forward or we don't, right? But what we have noticed is that a lot of the outreach that I did in the past, that they said no need for tranching, completely shifted now. Everyone is interested because it makes sense, right? I'm not saying that we have the solution. I'm just saying that exists in TradFi for years. That is the solution. We have a on-chain algorithm that does fully decentralized protocol.
People will use it
that proposes a solution. Right. But this is needed.
The crypto ecosystem and the industry is smaller than I expected when we first entered into it properly. In terms of even within the tribes or the separation of like centralized and genuine DeFi projects, within DeFi you get your different protocol teams, but everyone knows each other, right? It's not that big. And okay, if you go to one conference, you might not have 100% overlap for the people that were at the last DeFi Focus conference.
But if you go to five,
you see.
What was it? Your law of how many conferences do you need to go to? You met everyone?
It was 5.
Was it 5?
5 conferences, and then everyone who I wanted to meet, I met. Pretty much.
The famous 7 steps.
Yeah,
in DeFi is more like 3 or 2.
I haven't met Vitalik yet, but I think that
okay. We met Vitalik's mom.
Okay.
Well, that's even cooler.
In Bangkok, in one event, we were talking to her, and she ended up being Vitalik's mom. She was.
Come on, was she really?
Yeah, she's doing. I don't know.
How did she prove it? Proof of
zero knowledge.
No, social proof.
Social proof. Okay.
And then maybe if you look at a picture, it looked like definitely on the older side for the conference for the event that we were in.
My age.
You could start saying you're his dad.
Thank you. Yeah, anyone would believe that.
Yeah, DeFi is very concentrated. I mean, if you look at the size of DeFi today, is what on DeFi Llama 92 billion or 90 billion.
Yeah.
Compared to what? Yeah, compared to
anything.
Yeah.
Yeah, I hadn't thought about it like that. That's a good point.
If people are working on 90 billion, of which I need to see the numbers. I don't understand really. I haven't checked fully what the 90 means because there's 150 or more billion of USDT on Tron.
Yeah.
Right, that's clearly not in DeFi.
Yeah. So I mean, and think about in TradFi, like what size, even just if you look at structured products.
Oh,
Yeah, structured products.
derivatives, easy. Yeah.
I think we calculated it once that on off the back of the fact packet counts,
It was a quad something.
there was a quad number in the amount of derivatives traded that was going on in TradFi.
Annualized derivatives volume. Yeah. At least.
Yeah,
It's like Forex, right? I mean, it's
Derivatives is always a bit odd though, because you can have a notional and actually the risk can be quite small. So you can have like $1 million of an FX product or an interest rate swap product, and the actual sensitivity to the thing that you're trying to access is quite small. So those numbers always seem a bit inflated. But like global financial trading volumes are, huge.
and I moved into
Thing and then just full remote.
crypto and fully remote for the Swiss company.
Do you not like miss the bands though? Seeing the,
At one point,
seeing the guys and
at one point, my girlfriend she was working at Deloitte for going on leave, and she had a lot of this, after work drinks. Very British, when you go to
the pub
to the pub Wednesday or Thursday.
Yeah,
so
Thirsty Thursdays.
Come to the pub.
Yeah.
Not go to the pub.
Come to the pub.
So that very much you create this network, right? That if you want to sort of get into the industry of a certain industry, right?
Yeah.
In the city that you're in, it's very good to have these relationships. But in crypto, you kind of have them, in conferences or in trips.
Do you think that's why conferences are so
That's why.
It probably is, right? Yeah, because it's like it's the after-work drinks, isn't it?
It's
that you're not getting because
and
the
it's
team.
the same people. That makes sense as to why it's the same people as well, because it's people meeting up 4 or 5 times a year. Yeah. Okay.
And is it better to go to the Old King's Head every Thursday, or or go to Buenos Aires?
There is so many people that don't. It's kind of close. They don't live here, right? So Lawrence, right?
Yeah.
You guys are based here. I'm based here. I met him in Singapore.
Yeah, that's crazy.
So, I have one of my previous colleagues from a previous startup. He lives in Leeds.
Ledge.
And I've met him already.
Is he a Leeds fan?
I have to ask. My dad is a Leeds fan.
Yes, I remember. Yeah. We've had all these conversations.
Hang on a second. You're Argentinian?
Yeah.
Is your dad Argentinian?
My dad, he lived in Coventry in the 70s.
Why is he not a Coventry fan then?
Because Leeds was huge then.
I see.
Okay.
But I have a Coventry shirt.
He's a glory supporter. He's not served him well.
Leeds was big.
That's fair.
Yeah, we were huge in the 70s.
Yeah.
We were huge in the 70s.
European Cup.
Leeds.
European Cup.
European Cup, yeah.
So
there's a picture of Leeds European Cup up there.
is that the 70 one?
Yeah, have a look. Yeah, take a picture of it for your dad.
Yeah. So Bielsa went into Leeds, and my dad is a huge Bielsa fan.
I'm a huge Bielsa fan. I love
Actually, my dad talked to him. We exchanged some messages.
Oh, really?
Because he wanted to get him for a motivational talk in one of the company he runs. And Bielsa said, I have some previous engagements. But then my girlfriend bought me Tottenham Leeds tickets.
Oh, yeah?
And he was with his little bench.
With his little bench going to sit down, watch it then. Amazing. That's so good. Anyway, so you've been listening to the local podcast. We've had a great chat about Strata and Argentina and stablecoins, and maybe if it makes the cut, a bit about Leeds United. So thanks very much for joining us, Ramiro. Thanks for watching. Hope you've enjoyed it. And I don't think you like and subscribe anymore, do you? What do you do?
I don't know. I'm too old to know.
Yeah, like and subscribe.